Hello, I'm Matt Weaver, Chief Investment Officer for First National Wealth Management. And the topic I'll be discussing today is, are we late in this 3-year bull market cycle? And if so, how does that change how we invest here at First National? And I think it's a fair question, one we're hearing more often these days. And the short answer, we may be later in the cycle, but that doesn't mean we're at the end. And it doesn't mean we stop investing or radically change course. Market cycles aren't clocks. They don't end simply because time has passed. Historically, markets don't peak because they're old. They peak when financial conditions tighten, when economic momentum stalls, or liquidity dries up. Today, while growth is clearly moderated from the post-pandemic surge, we still see solid fundamentals. Corporate earnings are growing, employment remains healthy, and monetary policy is gradually becoming more supportive rather than restrictive. If anything, this phase of the cycle tends to reward discipline and balance, not dramatic shifts. Early in the cycle, risk-taking is rewarded. Later in the cycle, selectivity matters more, and that means favoring high-quality companies with strong balance sheets, consistent cash flow, and pricing power, while being more cautious with speculative or highly leveraged areas of the market. From an investment standpoint, this doesn't translate into going to cash or trying to time the next downturn. Instead, it reinforces a few core principles that we use here at First National. The first one is staying diversified across all asset classes. Second is rebalancing periodically rather than chasing recent winners. And the third is making sure portfolios are aligned with long-term goals and time horizons. We also view the stage of this cycle as one where income and risk management become more valuable. Fixed income is once again contributing meaningfully, providing both income and diversification, and that helps smooth returns during periods of higher volatility. So yes, we may be later in the cycle, but history shows that markets can remain in this phase for years, not just months. Rather than asking, are we late? The better question is, are we prepared? And preparation comes from a thoughtful, diversified strategy, not from reacting to headlines or trying to predict the exact timing of the next turn. That's how we approach investing today: measured, diversified, and focused on long-term outcomes, regardless of where we are in the cycle. I hope this was helpful, and I appreciate your time today.